Hello everybody, welcome back to the channel. 2025 is looking to be a very painful financial year in the US for a number of different reasons. We are so far seeing days and periods of time where we're seeing the S&P 500 drop by billions, literally even trillions in a very short period of time, with a drop now from the start of the year around about 10% in a lot of the major US indexes. It really is a shaky market that we're in. What we're seeing now is, though, some of the world's largest companies being aware of this, some of the world's largest companies putting out warnings to a lot of people based on the way that the economy is looking. You know, we're in an economy right now where apparently 2/3 of middle-class Americans say they are financially gasping for air, right? People have not got money to spend. There are a lot of people don't. People are struggling. And if a recession does hit, if stocks and the economy as a broader market continues to drop, you know, it is going to affect people's living quality. We've got a lot of people in the last couple of months and weeks who actually have lost a significant portion of their life savings. This stuff does matter, even in the short term. So it's all worth considering. And going back to the main point for today's video, we have a really interesting statement to look into. As of 2025, we're even seeing Walmart coming out with a warning of a slower year. Apparently it's a bad sign for the broader American economy, and I absolutely would agree. Let's have a look at what we're hearing from Walmart. So, during America's inflation crisis, shoppers flooded to Walmart for groceries and clothing, right? They're looking for good deals on a manner of essentials. But Walmart said on Thursday, in 2025, it will be a trickier year as consumers grow increasingly frustrated with inflation and are more concerned about President Trump's tariffs. And we are seeing this in a lot of different articles and a lot of different media sources, right? People are very nervous, both in the US and perhaps internationally, about tariffs and the effects of tariffs going forwards and the potential that could have to push prices up. This certainly is a topic on a lot of people's minds at the minute. So absolutely a big concern for many people. Anyway, Walmart warned on Thursday that its sales and profit growth will slow this year. The forecast sent the stock tumbling by 6% during the day of trading. It also dragged the Dow, which fell 1%, or more than 1%. So to be sure, Walmart's business remains relatively strong and consumers are resilient, the company said. But Walmart said that sales will grow 4% this year and profit will grow up to 5.5%. But this was short of what investors actually expected. And perhaps this leads to the fact that the economy is not as strong as many people believe. You know, we're seeing a point now where a lot of stocks are dropping. A lot of people think that is the beginning of a recession. But we've had a lot of really intelligent people suggesting that an inflation-based or a general recession could have been here for a long time anyway. And perhaps it's just being reflected in the broader markets right now. Anyway, let's read a bit more about this and go on to speak about what is going on. So Walmart is the largest retailer in the United States, and it absolutely is a massively known brand. Everybody is aware of this. Although it does project a slowdown, and it's a signal perhaps for the rest of the retail industry in 2025, looking at a rockier year. So David Silverman, Senior Director at Finch Ratings, expects a degree of retail choppiness to continue in 2025, given a recent dip in consumer sentiment, particularly for the lower end consumers and tariffs, right? He said this on a note to clients on Thursday. Consumers making $100,000 or more are even looking to save on groceries, right? It's fueled the growth in Walmart in recent years, and Walmart has built a strong online operation to rival Amazon. It also said that the option to buy online and pick up in store is a really great thing, right? It really helps people. And this has also led to a grocery delivery membership program. So there are a lot of benefits to where Walmart has been able to kind of fill a gap, grow its market in the last couple of years with a lot of people essentially looking to save money. But we are potentially in a position right now where a lot of people are nervous. And again, Walmart has acknowledged that it will have to navigate tariffs and manage other challenges. Trump recently enacted a 10% tariff across the board on goods coming from China and 25% tariffs on steel and aluminium imports. Trump has paused tariffs on Mexico and Canada at the time of this was being written until March, and has also pledged to impose reciprocal tariffs as well. So Walmart's outlook. Apparently, Walmart assumes a relatively stable macroeconomic environment, but acknowledges that there are still some uncertainties related to consumer behavior and global economic and geopolitical conditions. Walmart's finance chief John David Rainey said on a call with analysts. So yeah, really interesting stuff. And what we are seeing now is a lot more people being aware of this position that the American economy is potentially entering into, potential recession. Some people even indicate the potential of a depression on the way. You know, we've been seeing in a lot of different industries and a lot of different companies, big job cuts for a long period of time now, coming into 2-3 years now. But the question is, what are we looking at in the broader market? Now, if we're seeing companies like Walmart, you know, a staple of the home, a retailer essentially selling a lot of essential produce, saying that they expect, or it is anticipated, that the markets will be weaker, potentially this is significant. And it says Walmart is not going to be completely immune from tariffs, so potentially another hit to the consumer. Now, a lot of Americans are showing signs of concern about the economy. Most adults nationwide, 62%, feel that President Trump has not gone far enough in trying to reduce the price of everyday goods. Consumer prices rose 0.5% from December, the fastest pace in more than a year, as energy and food costs continued to bite. Egg prices have soared as a result of avian flu. And Walmart said that it expects nominal inflation this year of 1 to 2% despite the price rise in eggs. The truth is though, everything is to play for at the minute. And again, going back to this point, we are seeing so many people struggling. We are seeing so many people cutting back on their spending. It's a point that we've looked at several times on the channel before, but how many times have we looked at these corporate layoffs going on in 2025, right? These are just some names from last month in February and some coming into March, right? We're seeing things like DHL, we're seeing Goldman Sachs, some of the world's largest companies, Starbucks, HP, some really large names cutting their workforce as the economy continues to struggle on. A really difficult time to be an investor, a really difficult time to be essentially anyone, right? It's a very shaky economy out there. And now we've seen a lot of big brands starting to acknowledge this. I think it really is a very uncertain time. A lot of investors are aware of this. That's why we're seeing the markets drop so much. A lot of consumers are as well. And it really is looking like it could go either way, right? It could be a very shaky time going forwards. I want to hear you guys' thoughts on this in the comments, so do drop me one down below. Thank you for watching. If you enjoyed it, give it a like and subscribe, and I hope I'll see you again soon. Goodbye.